Good afternoon, everybody. I'm Liz Clayman. Countdown to the closing bell beginning right now. Optimism may reign with stocks today charging ahead, but let's shake it up with the team to find out what's capturing their market imagination. Tyler Vernon, we'll start with him. He's the Chief Investment Officer at Biltmore Capital Advisors. Tyler, what are you looking at right now?
Well, I think we're looking at what CEOs have to say, specifically not necessarily what earnings are doing this quarter, but what the outlook is going to look like for 2012. Is it gloomy? Is it not? Are they on track? What's happening? Are we going in recession? So that's going to really help us and other money managers.
Do you discount Alcoa?
They reaffirmed some of their numbers, but I think we still need to see some more companies, some different kinds of companies just to start reporting before we start really putting together theory about where the market's going to go and headed in 2012.
Which names quickly?
Which names?
That are you looking at when it comes to earnings as well?
Well, UPS over the next couple of weeks is going to be very important because that's specifically going to take a look at, they see what GDP is doing on a day-to-day basis. So that's going to be really important over the next couple of weeks.
Yeah, UPS and FedEx, they're Dow transports as well as big names. Okay, let's get to Ashley Webster. Welcome back. Okay, so we are up 144 points, just slightly below, making it break even for the Dow Jones Industrials for the year. I have a question because a lot of us who started investing a couple of years ago, maybe a decade ago, we used to buy something and then figure I'll look at it in 7 years and it'll be fine. But are those days of buy and hold over? Tyler Vernon of Biltmore Capital Advisors says you better believe it. But don't worry, he's back with his 5-pronged strategy to make you money without having to rely really on the stock market. I don't have to rely on the stock market to make me money.
Well, if we look at periods in history, the late 60s to the early 80s, that was 20 years where we just went sideways. Here, we've been in 10 years with 2 bear markets of over 50%. This volatility is making people mad. You know, the average time frame that people hold stock is about, a little over 2 months. So it's a trader's market.
2 months? That's it now?
That's it. It was just, 10 years ago, it was several years. So, we believe in having a lot more versatile strategies that at least can short something as it goes down, whereas most mutual funds, even if they had a crystal ball and knew things were going down, they couldn't do anything about it. They're losing money.
And they're charging you 0.5%, 1% in fees. So
right, they can go maybe to a little bit of cash or buy stocks that aren't going to go down as much. Right. So there's really a couple things that we believe very strongly in, and this is what institutions have done and very wealthy investors have done for years and years and years. The first is long-short strategy. So just over the last couple of years, more and more strategies are coming out. In fact, managed futures, which we'll talk about, is another strategy that really has just been allowed in mutual funds over the last 12 months.
Define managed futures.
Well, futures are contracts on things like interest rates and different kinds of commodities and metals and these type of instruments, currencies, how they're doing. They're what you hear on these shows, right? The dollar against the euro, but no individual investor who's working would really have the time to trade these things. Now, managed futures are just experienced managers that are looking at these from a day-to-day basis and are both buying into these markets or shorting them. So they're managing risk within these strategies. In 2008, managed futures were up 15% when everything fell. So these are the type of things that you can access now through some mutual funds, some really interesting funds that are doing very well this year. And I think these are the type of strategies, again, managed futures, long-short strategies that will need to move forward as far as investing in the future.
And you talk about interest rates, metals, which are, of course, in a way, commodities, and currencies. So currencies, the retail investor, and we've got a lot of smart, polished, sophisticated investors watching right now. You're going to tell them to short the euro versus the yen or the Swiss franc?
That's why I don't think that most investors can really do this on their own. Okay. And that's the real benefit. And I think there's about 3 funds that have popped out over the last year that do this, that have very experienced traders, that they are looking at this, and whether people are worried about inflation or the dollar falling, these managers are taking advantage of that. When gold fell down just a couple weeks ago, they were out of the gold trade and started to short it. So these are very active short-term managers. You don't want to do this at home.
Okay. And some of those funds are?
Equinox is one fund. Altegris has an interesting fund. Biltmore is planning on launching a fund later in this year just because we think there's so much opportunity there. And I think investors, we hear it all the time at Biltmore. They're sick of the market. They're sick of the ups and downs. They're looking for other opportunities, and they want to find more tradable strategies.
Especially our seniors. Our senior citizen viewers are getting very concerned about it, and they're saying, I don't have that much more time to be able to grow a nest egg. And that brings us to covered call
Yep.
options.
Sure.
Talk about those.
Well, again, options are, they're somewhat esoteric, but there's a very easy way to talk about covered call options. The risk, if you own a stock, you sell a covered call, the risk is that you would sell it at a higher price.
Right.
In today's environment, that's not much of a risk. At least people don't perceive that as too much of a risk. So they're paid a certain income for this covered call, and with the volatility in the market, the premiums that people are generating right now is really phenomenal. So again, even if these stocks go nowhere, they're picking up great dividends, and they can pick up about 10% through covered call options. Again, strategies that they might want to get advisors to help implement, but these are the kind of things we've been working on with clients for quite some time.
Now, if you still want to stay with plain vanilla stocks, Tyler's coming back in just a few minutes to name 3 stocks that he says aren't plain vanilla. They'll give you some nice returns while you're waiting for the market to settle down just a bit, if it ever does again. So, Tyler, you'll be back in a second. Let's look at shares of investment officer at Biltmore Capital Advisors. He's going for the high dividend players still. He is back. He is naming names. And when we're talking about these, we're going to talk about some specific names that have these dividends. Shall we go to Tyler right now, or do you want me to toss to a break? Here's Tyler. All right, let's start with your first name, and that is a name that has, if you were to run a stock screen of companies with 10 billion market cap,
Yep.
and they have the best dividends, the highest dividends, this comes out as one of the top 3.
Sure.
Seadrill.
Nobody knows about this thing. Really the theme behind this company is that the world is consuming more and more oil, but it's getting harder and harder to find. Seadrill is an offshore driller. They're one of the best at doing it. They specialize in dealing with very harsh environments, very deep water type of drilling. They're signing contracts left and right all over the place.
Dividend, by the way, 9 to 10%.
It's great. I don't care if that stock goes nowhere. I'll sit back and collect dividends and pay my 15% federal tax on it.
Now, your second name is one that's familiar to a lot of people, General Electric, which used to be the buy and hold stock for widows and orphans. That's an expression that people used back in the day.
Yeah. And people have really given up on this stock. They've seen over the last 3 years the revenues going down and down and down, but that's been part of a master business plan. He's specifically been shedding off non-core business assets. And I think as we look forward, we're finally going to see revenues start going up. We're going to see earnings start really propelling. Boeing is finally getting their Dreamliner out. That's going to help. There's a lot of energy infrastructure that's being built all over China. So this is a growth stock, and we're going to see growth. We're going to see it move.
Tyler, thank you so much. In fact, we'll have more of Tyler's picks on the website. Thank you very much for joining us.
It's great to be here.
He's back with a number 1 moneymaker in just 6 minutes.